Ladies and gentlemen, welcome back to our last session for today. We just talked about the piece, and now we're moving on to companies. Cross-border settlement and transfer prices gain more and more importance, in particular between Chinese and German companies in a group of companies. We are using an outbound case, a German parent company with a Chinese subsidiary. The speakers will talk about the following questions: and the cost allocation agreements with regard to management services, licenses for production know-how, and the use of trade marks and company names. So we're looking at the new Double Taxation Treaty that will become effective as of 1st of January 2017, and the new dispute settlement mechanisms. We are so happy to get a speaker from China for this topic, Mrs. Dr. Qingfang Wu from the Ministry of Finance in China. There, she's the Director for Internationalization, International Tax Matters, focusing on the tax policy in the ministry. And apart from that, she's also a lecturer and professor at the International Trade and Economy University of China. And that's why we're going to experience a high-caliber guest from China. And I can't wait to hear her statement. Then the main speaker of the real case is Michael Volk. He served as tax auditor in the international, and he works at the Bavarian Tax Office in Ansbach. And he's also a teacher in the Regional Financial School in Bavaria. Then Michael Bär is here with us, and he's the head of the International Tax Audit Unit at the Bavarian Tax Office at Nuremberg. Before that, he worked in different functions in the Bavarian Tax Office, and he is also a lecturer at many further education training and SDR seminars, internally and externally, also dealing to provide international consultancy for international tax law for the Regional Association of the tax consulting jobs in Bavaria. Now, Michael Bär, Michael Volk, and Director Qingfang Wu from China. Right, we'd like to welcome you cordially to our today last session, cross-border settlement of services after the entry into force of the DTA China. Dr. Wu has made the long trip from Beijing to Munich, and she took this long trip in order to assist us in our case, in our audit case.
I'm from China. It's my great pleasure to have a chance to attend this exciting forum. I think Germany is the most important investment partner for China in Europe. So China pay more attention to Germany. I'm very glad to introduce us the tax reform and the tax laws and the regulations about tax audit. So thank you.
Thank you. Ja, ich darf beginnen, Ihnen unseren kleinen
So I'd like to start with our little audit case that has different facets to talk to about cross-border settlement of services between closely related people between Germany and China. Well, that's day-to-day practice in tax audit, and that's why automatically that will be one of the focus points in our audit cases here. We'd like to look at a few cases that have resulted from an audit case covering 2008-2012. And we said at the beginning which services that are relevant here. And we're going to explain areas, cost allocation, and also the provision of name rights, and also the question of licensing.
Zunächst eine
Then also going back closer to our case, and we also would like to take a look at the new DTA with China that is going to go live on the 1st of January. And for our old audits, the old DTA was relevant. And also, we also have a few clues from the German documentation requirements in connection with the new documentation requirements applicable since 1st of January 2016, applicable in China. So the DBA, in our case, was the old case up to 2016. So we're still working with the old DTA. And there were some tax specialities, for example, the fictitious tax credit for interest and license income. And now due to the application of the notifications, the completion of the notifications, there were a few adjustments. Some special regulations remained. And one important practical note is the fictitious tax credit will no longer be relevant. In the new DTA, we will only have the materiality of the actually paid source tax, withholding tax. Further to the organization of the foreign tax audits in Bavaria, and you seen with Mr. Hassalt, and we've been having this for more than 50 years. In the practical case, you realize when the foreign tax auditor has been obtained because of additional tax requirements and audit requirements, then there's also a special auditor that is also taking part in the tax audit in Bavaria. We have 50 foreign auditors distributed to the different locations in Bavaria, Munich, Nuremberg, and Zwiesel. So the foreign auditing center supports the International Tax Center, which has been mentioned several times, and that was established in 2013, and so we're working closely with each other. So far for the preliminary statements. The facts and circumstances of this audit case are not complicated. We've got a domestic holding that operates a subsidiary here in Shanghai in September 2009. And we have an outbound case. That means the new establishment in China. And our Chinese subsidiary produces and sells plastic components to different locations of European automotive manufacturers in China.
Denke ich, ist
These are the facts again. So how did we start? The financial authority involved us for the external tax audit, a supplementation of the audit order, as already mentioned. This includes the specialist audit, and normally one would have the German documentation requirements, Section 19, Paragraph 3, in conjunction with Section 1, Paragraph 6. So one has disregards the documentation of profit allocations. And then the question arises whether there are records for exceptional business transactions. But our auditor immediately got the answer that this is not the case. And at a first view, we asked about the reports mandatory reports according to Section 138. And these were not available to the Inland Revenue Office. So what did I do, or what did I found as a foreign external auditor? We already heard the two focal points that we're going to investigate today. First of all, we had management services settled as a cost allocation by the H GmbH to the H Limited. And this service, there was a service agreement which listed certain services, primarily support services in the fields of finances, controlling human resources, IT, marketing. And what is even worse about this whole thing, that there were support services in the field of the operational management. This agreement, 30 days after conclusion, this service agreement was reported to the Chinese tax authority. And in this audit case, we also came across two write-offs, a partial write-off in the amount of approximately 1.9 million euro as per the 31st of December 2012 as non-recoverable services. And what should always be examined as well is the free use of the trademark or group name. The H Limited, in order to be to get in contact with the European automobile manufacturers in China, it had to use the trademark of H GmbH on the letterheads, on the internet, on the website, and of course the trademark or logo H GmbH was also on the plastic parts that were supplied to the automobile industry in China. And last but not least, we had to appraise a license agreement, also agreed in 2009, i.e. at the beginning of the entrepreneurial activities of the subsidiary in China. And the know-how made available was laid down. But what was special about this case was the co-coverage of employees' secondment, i.e. specialized staff, and the fee was 0.5% of the net revenue from the products which required a license. And we inquired where the 0.5% would come from, and we were told that in advance of the contract there were negotiations with the local Chinese authorities, and the 0.5% were actually authorized by the local Chinese financial authorities. So we found a lot as a specialist foreign audit, and in order to have detailed access, we had an administrative act of the 5th of May 2016 and requested with this act to obtain the transfer price documentation. And in the middle of August 2015, the financial authority received this documentation. This transfer price documentation consisted of two parts, i.e. the factual documentation, and this contained the service agreement. And in addition to the service agreement, there were lists of the invoiced employees as well as their function. There was no statement in this documentation relating to the foundation of the Chinese subsidiary. And then we had the appropriateness documentation. Here the company gave us a benchmark study with ranges classified according to various services areas. And this was, in addition to that, we had an hour sheet of the employees who were employed, especially in the sections IT and tax and legal, where we didn't have any timesheets was in the field of the management services, i.e. where managers, management activities were charged, and here we only had an estimated timesheet of the amount of time that was spent by these managers. Other documentation that was presented within the audit were minutes of the shareholders' meeting of the HGmbH from July 2013. And here, during the shareholders' meeting, there was a discussion about what to do with the money. The Chinese authorities apparently didn't accept the service agreement, and now the money was in China, and so Alternative One passed a resolution saying that the money could be distributed via a dividend payment and thus remove this money from the Chinese subsidiary. In the course of the audit, we also got insight into the tax documentation and records from the year 2013, i.e. out of the period under review, and we found a distribution resolution of the HGmbH in an amount of 1 million. So the residual receivables was only, which were irrecoverable, were 910,000 euros. When the tax return was filed for 2013, a tax exemption according to Section 8b, paragraph 1 of the Corporation Tax Act was asserted for the profit distribution and submitted as a tax return. So this is a very complex case from a German point of view, and that is why we would hand over to our colleague from China, who has prepared a comment on all of this.
The deduction of cost of China's law, we have three principles, criteria. The three criteria is relevance, authenticity, and the arm's length. In 2008, we ignite the enterprise income tax law. The Article 8 and Article 41 all stipulate that this intra-group activities must on a reasonable and actual basis, including cost, expense, and tax laws and other items, which do not comply with the arm's length between an enterprise and a related party, which do not comply with the arm's length principles, will not be deductible from the income tax. So China has been paying attention for the intra-group service fees and royalties. On 2050, China released a bullet on enterprise income tax issue concern outbound payment to overseas related parties. That is Bulletin 16. The 16 Bulletin reaffirmed the arm's length principle for deduction of intra-group service fees and royalties. So the benefit test must be approved between both the service recipient and the provider. Both need to benefit from the cross-border service. Service fees should not be deducted if the benefit in indirect economy benefit not accept. So Chinese tax authority may challenge the deductibility of royalty payment to overseas listed company, which claimed that the listing of the group enhanced the reputation of the subsidiaries in China. Other tests about the necessity test and value creation test, duplication test, remuneration test, and also authenticity test is also noticed by China's tax authority. So how about the other questions? about required taxpayers to do.
Wir haben dann nochmals Gelegenheit auf.
We will have the opportunity to talk about the other questions later. Thank you very much for the time being. So we noted that basically the idea is that is based on the arm's length principle, which is quite relevant and profound in China as it is here, but there are still differences. And I think these differences have to be solved in practical life. And I will continue with our audit case, which is a case from the past. And at the end of our presentation, we want to think about how there are different opinions that can be removed for the future. So let me come back to our audit case. What did the tax audit look like? We looked at the non-fulfillment of the reporting obligations. This is not a new obligation. This has been contained in the AO for quite some time, and it is considered more and more in practical terms. But of course, there's still a lot of room for improvement. And if we note that this report doesn't exist, then we request that that be filed afterwards, and we will mention it in the audit report that the taxpayer was told that there's a reporting obligation here, and if there is a new establishment which meet section 138 paragraph 2, that this person remembers from the last audit that there are certain reporting obligations. And if we note that this obligation is violated on a regular basis, that for us would be a reason to report this to the Office for Fines. So I think this can be avoided. The next point is the non-fulfillment of the prompt documentation of obligation for exceptional business transactions. Here we have a division in two. First of all, we've got the exceptional business transaction where you or the taxpayer has to document of his own accord, and then we have normal business activities where the taxpayer is requested in the course of an audit to provide documentation. Here we are talking about the exploration of a foreign market, that is China here, and the use of local location advantages, and this would be an exceptional business transaction. We assumed that there should have been prompt that company would have been subject to prompt documentation obligation. We always look up whether within the framework of this establishment there is a relocation or transfer of functions. This is one of the core audits of the finance authorities. If the company, or if there were a negative demarcation necessary, it is good if the taxpayer actually thought about that, and if we see what result the taxpayer came to, then we can use that as a basis for our own ideas. So that means here in our in the GAUFZV, it is laid down what the administrative or fiscal authorities considers to be an extraordinary business transaction. We believe that the legal facts were given, and now the consequences. We have to praise the establishment of a company abroad. And so the question is that evidence has to be provided according to Section 19, paragraph 2, as part of the serious effort required by law to comply with the arm's length principle. And here I think it is very important for us that as part of our audit, we record the decision-making criteria and we can appraise them, which are the reason for his measures abroad. So what is very important is that we can understand what ideas, what plans, what concepts were taken into account when the arm's length principle was applied. If there is a risk of surcharge, maybe if there is a delayed submission of the usable documents, most parties always try it very hard, and I think this serious effort is something you can feel. It's very difficult to meet the arm's length principle in all its facets, but if somebody tries very hard, it involves a lot of work, and the auditor actually notices that. So from our point of view, one has to record the decision-making criteria promptly and quickly, and this is a far more substantial proof than if I didn't have this prompt documentation and only do it afterwards when the auditor is there and asks for this documentation. And in many audit cases, there is a lack of evidence. When we come, sometimes the company has been reorganized twice and the staff has been replaced 3 times. So then the question is, how do we deal with such a situation if the evidence available is not so good provided by the taxpayer? And we want to take a look into the future as well. The tax assessment point. We think, according to the arm's principle, it is when I do business with third parties, they think about selling something to the person and what is the price when the service is rendered. And this is the same when you have subsidiaries within a group. So in our case, services are received in China, and I have to think about what the price is within my business relationship. In order to underline the importance of the required time, we've got an implementation law, which is going to be passed here, and we've got Section 90, Paragraph 3, which underlines the significance of time. So the document regulations in particular require information at the time of the transfer price determination. So we'll continue with the tax assessment, the cost allocation contract. We just heard Ms. Wu give us the Chinese view. If we look at the German approaches and compare them, we still have Section 4, Paragraph 4 of the income tax law. So if we've got various parties that are involved, we have to apply our operating related perspective, or point of view. And especially when you're dealing with a large group, we have to look at the various initiation levels and have delimitations. So we don't cherry pick here. We have to make sure that everything is very factual. Here we've got a parent company in Germany. So the question here relates to the correct full burden with regard to the reason and the amount in relation to the subsidiary in China. And this is where we left off. In the decree of 1988, we have 1983. We have the costs that are capable of settlement and those that are not capable of settlement. And we have certain costs that are not capable of settlement, and these are costs in connection with the use of the groupman as well as the legal and strategic organization of the group and the control and the internal audit. So these are so-called central costs in the group. They cannot be settled or transferred. By country, in figure 6.3.1, one has a listing of costs that are capable of settlement, and these are exactly the costs that we are dealing with in this case. For example, we've got accounting, human resources, IT, legal and tax advice costs. And of course, we also have our management services for the operational management area of H Limited.
And here are national principles from the income demarcation decree, also goes in line with the international principles. And basically, based on the OECD guidelines, they are in line with the contents. And what is decisive for such a transfer settlement, whether the assuming company, the receiving company, needs the services. That is the so-called benefit test. And the local manager decides based on his own belief and knowledge whether he actually needs these services and will buy them on the market or will buy that from the parent company. In that case, it's our H GmbH in Germany. As an interim result from a German point of view, ability for settlement exists with regard to the reason. In our opinion, there are, without a doubt, services which can be settled, which were provided clearly delimitable and measurable in the interests of the Chinese subsidiary. Now let's look at the arm's length principle. And now it's becoming a bit more difficult in our tax case, in our audit case. So we're using the principle of the arm's length benchmarks, which is the market prices, which has been regulated by national regulation, which is paragraph 1, section 3, sentence 1, ASTG, so where the three most common transfer price methods have been mentioned, the price comparison method and also the cost surcharge method. However, ACG now does not provide any sequence for the method of these transfer price method, but the proper and conscientious business manager can decide himself which method he might select, which is most suitable for the relationships for the services fees. So our management here decided for the benchmark study based on the of the data provided by the Chamber of Commerce, and we were faced with the following problem. The services mentioned there, are they comparable with the services with regard to the service fees? And for example, the services obtained or rendered in operative management, that is management services, were compared with values from the Chamber of Commerce study for the activities of the business consultants. So now the question is whether the activity of a manager that works operationally and operatively comparable with the activity of a company and a consultant completely, and is it identical completely? So in the management services individual case, we had activities with a high value-added ratio. That means, based on our opinion, the arm's length benchmarks, which were suitable on the market, are therefore very difficult to find and they cannot be compared. So what do you do if you compare, if you don't find prices comparable on the market? So So our decree from the year 1983 also provides the cost allocation contract. So you just use the cost surplus surcharge method because this relates to real costs and based on actual costs. And the same is the BEP action plan and the recommendations. So that's why this is decisive for the selection of this transfer price method to be used. And for the taxpayer, the question is also of the facts and also the documentation of the facts. That means the taxpayer has to inform us and give us transparency. So it was our opinion when we discussed with the topic with the company. So when the benchmark study was taken from the Chamber of Commerce and we cancelled it, and so we said that okay, these data are not cannot be used for the lack of comparability in order to use the arm's length benchmark. So the target we had was, of course, is to use the cost plus method. Now, in this step, so we made further investigation measures because the individual services had to be examined. We looked at the services with a low value added, that is finances, controlling, and HR, was listed here. Probably you could see market prices, and so you might find ways to use the price comparison method. And when services have a higher value added contribution, that is marketing, sales, purchasing, and that's more difficult to find market prices that can be compared. And where was the difficulties to provide market comparison? Which are the services on a high value added contribution? Which are the management services? And that is basically for age limited found in during the establishment phase, and they have been rendered on an intensive basis. Then the company went on with that discussion, and they admitted that they had some problems of providing detailed figures because it's always becoming more difficult to provide detailed figures, and that, of course, costs money. Then the company offered an argument. They said that, well, we don't have any transfer of settlement of services, but this is just a cost allocation with regard to the meaning of the BMF letter from 1999, and that's why we don't have to worry about the amount of the cost surplus and the profit surplus. Practically, you quite often hear group allocations and distributions. Is that the same? Are there any differences? They talk about allocations, but are we talking about allocations within the BMF, meaning of the BMF letter 1999? Or probably we are settling services or bundles of services, and that's what we would like to analyze further. When do you talk about settlement of services and bundles of services? So when we're using arm's length benchmarks and using the BMFS letters from 1983, so when you settle services, then the service exchange principle is in the foreground. That means you've got one company, the company that renders services to other companies and entities, and that's why it's also exposing itself to certain risks when making these services, and that's why the company wants to gain a benefit from that by a profit surcharge. Whereas the allocation contracts derived from the BMF letter 1999, well, yeah, you can call it as intrinsic company, internal company. That means several companies merge to a pool in order to have equivalent joint interests that they pursue with the distribution of the benefits based on risks and benefits. The costs will also be allocated among themselves. That means this is no entrepreneurial risk here, and that's why no profit markup may be used. And you may also think of a reasonable return on equity, but that was just a consideration on the side. So in both types of settlements, the starting point, the full costs have to be looked at, but we have a time difference in the services. The planned costs have to be included into the calculation, whereas when it comes to the allocation of costs, the actual costs have to be used. And, of course, everything has to be documented sufficiently. And that was the problem. With the documentation was the difficulty. So what are the consequences when safeguarding the principle of this company? So the precondition for an auditing and checking of the transfer prices are the presentation of reasonable documents while complying with the requirements of the national stipulations of the GAUFs, and also the proof of provision, regarding planned costs, and also with the hours recorded. It always looks good if these records are being taken in due time and then can be rendered when proof has to be provided. And once the documents have to be obtained later on for whatever reasons or coming from archives, and it's always bad for the company, it's quite a big effort, because that's why it always makes sense to record these data in the going business. In our real case, these requirements or these submittal requirements had been fulfilled to a partial effect only, and also with regard to the amount of the management services settled, and because only the reference to benchmark study was made in this case, and the management fees was regarding the management fees. You might have noticed it at the beginning. I mentioned the clear data, and when the reference price and transfer price documentation was required, and when we received it, the documentation came outside the 60-day deadline. So then we said, okay, all right, we can make an estimate based on 162 of the fiscal code. And the discussion that we are having with the companies now, will assessment be seen as an allocation? Based on our opinion, this is as excluded here as the services of the parent company exclusively were made in the interests of the subsidiaries. That means that was done within the scope of a service settlement. And we also had to discuss, do we correct this internally or externally, off balance or in balance, based on Section 1 ASTG. Then at the end of the audit, we said that we take this as a settlement of service bundles. And that's why the profit markup was generated. And then we also provided it, we disclosed it as receivables as a result of the existing basic contract. Oh, well, that was quite complex. Actually, it's a just regular fact in a group auditing, and you see what else has to be done, and there's quite a lot, and it's not so easy to handle that from a German perspective. So the further focus of the audit was to free use of the trademark and the group name. And in our audit case, was not a big deal, was not a big problem, because we didn't know the current BFH decision, but we knew our good old BMF lit from 1983, where the authority said that there's a license for using the name, and that using the licensed name cannot be settled by taxes. So we took the statement from the 1983 letter, and that's why, based on that, we did not go on with any investigations, because we didn't see any reason further. For your information, the current BFH ruling is still being discussed on a country level, and then it was also during the last meeting of the external tax auditors, and there will be a letter coming from the BMF about the overall problem situation. And that's why it's important for tax authorities that inbound and outbound tax matters are being dealt with and assessed with based on the same principles. Therefore, the findings are that there's always different what you need to declare depending on whether you have an inbound or outbound case. So we're always happy and thankful that the BMF letter still goes on in standardizing these principles. What we found in this ruling, and I think it's quite important for corrections, based on paragraph number 1, the business relationships status. So number 1 of the international taxation law changed. So it's important that for the years 2003, the version should be applicable, that it would be sufficient if also there is an agreement under the law of obligations, because there was always this differentiation between the law of obligations and the law of companies. And you might have noticed that there are 2 different procedures which are interesting. So the FG Rhineland files provided a submittal and to the OEGH and the ECG to find out whether there's still the proof to be rendered for economic reasons. And we also have a comparable procedures from the Saxony Finance Court, and where the appeal proceedings are still pending. What is important from 2016 as of 2015, and the Customs Code Adjustment Act also looked at the business relationship term and made it clearer, where an agreement according to the Articles of Association will only be assumed still if this directly leads to a legal change of the shareholder's position. That means that provides a strict interpretation in this paragraph, and that's why this has to be assessed. Time flies. Hopefully they don't switch off the light. Now let's look at the last focus of the audit, licensing. Our contracts provided as remuneration was near 0% with license-related net revenues. The reasons provided by the company that our local Chinese authorities were negotiating that, which is highly important, that this has to be coordinated with one authority. But the problem we had now, that we do not have any further documentation of the appropriateness considerations with regard to the amount of the license. And then, of course, the question is, will that be sufficient substantiation if you have a license amount agreed with one state? Or should we also be part of the game? And the other question is this agreement that is conform to the arm's length principle? Well, these things inspire any auditor's activities, and that's what did we do then? Well, we started our own search and tried to obtain a market-oriented license assessment. How do you do that anyway? Then, of course, we had the ability to access external databases and license databases. I mentioned 3. And also, we used the option of license databases at the BZSD. Finally, this is not accessible to tax consultants, so we have to take the first 3 only. And based on this database research, then we used the acknowledged profiles, license subject matter, the starting of the period and reference amount and territorial regulations. We had 1.5 to 1.8 that we calculated. So we had in the audit case, we had a production and sales license where also the secondment of specialists were covered. So what we did, we used the mean value of the bandwidths from the database research, 4.75% as surcharge for the assignment of employees and 0.25%, which is the discussion approach with regard to the appropriateness of the license fee, amounted to 5%.
We attributed to the company that there were no license revenues generated in the HGMBH, and therefore, since there were no revenues, no license could be generated. As the correction of volume was quite a big sum, 1.6 million, and I have to admit quite honestly that in view of this database research, we've got one problem that we're always discussing with the comparability of the licenses that we always use here. In recent years, we also use the Knopper formula that was the basis of a profit split, and that was the assessment yardstick, as it were. But recently, an American court in 2011 said that this was not a proper measure for substantiating the arm's length principle. So we can only use this formula to a certain extent. And now we are primarily using the assessment from license data from the databases. Also, the BEPS results are clearly against the rules of thumb. And as in any other case as well, there is a certain interest as to what the entrepreneur attributes in terms of the added value and to what extent this is represented in the price fair documentation. Just to close, I would like to refer to an essay by Dr. Nessle. And in her essay, she said that a rule of thumb is not the substitute of a functional and risk analysis, but certainly one possibility. So you can see that they still like the Knopper formula. The last focus of the audit is the write-down of the going concern value of the receivable. We had set up certain receivables which built up over the period under review, and then the payment was suspended. So what do you do in the balance sheet? What you do is you have a write-down of a going concern value of the receivable. This was the unsuccessful negotiations were blamed, and the liability is irrecoverable. We, on the other hand, from a German point of view, under the law, civil law, there was a payment for services rendered, and we didn't see that a write-down of the going concern value was justified. There is a functional significance in the subsidiary, so in the balance sheet, the write-down of the going concern value was not recognized. And another topic is that in the documentation there was an off-balance sheet correction, which didn't happen, or which should have happened and didn't happen. If there is a clear legislation which is not taken into account, then that has to be taken into account by the tax auditor. So what does the auditor do? At the beginning, we had an indication that there was a dividend payment resolution because they had more liquidity in the on the account, so they decided they were going to have a payment distribution of 1 million euros. And now the idea was, couldn't the profit distribution be considered as a partial redemption of the receivable? The taxpayers said that we had more cash and they distributed more. Our approach was, or we could only take that into account to a certain extent. The proof of burden is with the taxpayer as far as the write-down of the going concern value is concerned. The disclosure of the receivable at nominal value was taken into account, but we couldn't recognize the write-down of the going concern. And the slides of the colleagues were only handed in the lunch break, and it's almost impolite that we had to let you wait for so long. We're looking forward to your statement now, and I'd like to hand over to Ms. Wu again for a comment from the Chinese side, if you wish to make a comment. Dieser Fall ist sehr interessant. Gemäß dem chinesischen Recht.
Certainly, some service fees is not deductible. As to our case, management service in the field of finance, including human resource and IT, provided by the headquarters, like German, may be considered as service unable to bring to Chinese companies any direct or indirect economy benefit. So this service fees may not be deductible. However, service in the phase of marketing, sales, and purchasing, production and operative management may be able to pass the benefit test. So it may be deductible before the income tax. As to the documentation obligations, China is a very big challenge for the enterprise. Also like German, because tax authorities have the right to request relevant document and contract or agreement signed between related parties to substantiate the relevant authenticity and arm's length nature. So the enterprise, if the enterprise should not afford such document, they may think this is not comply with the benefit test. So I think is a subjective issue according to the tax authorities officials. So it's very obligations. As to the royalty, just like a license, just like I mentioned before, Bulletin 16 in China has illustrated two types of intra-group payment of royalties that are not comply with the arm's length, such as the royalty paid to the overseas related parties, but merely presents the legal ownership, but fail to contribute to the value creation of the intangible are not deductible. The second royalties for incidental benefit from financial activities paid to overseas holding companies or financial companies for the purpose of financing and listing is also not be deductible. So I think the German companies investing in China should obey these rules and obligations. That's all.
Vielen Dank, das waren.
Thank you very much. These were very important practical indications for our German companies. And I think what is very important is the mutual understanding, the knowledge of how people, or the people in different countries think and how they assess situation and fact and how they audit them. And I think you've given us some very important information for our work in the future. Thank you very much indeed. We're still not totally finished with our presentation. I will try and finish it as quickly as possible. From a German point of view, we've got some thoughts. We just heard that there are new transfer price documentation obligations which were introduced in China on the 1st of January 2016. And here side advantages are questioned, and we in Germany we will get the arm's length principle decree, and here we will have to look at how we're going to deal with advantages in various locations. So interesting discussions are for sure in the future. We will have topics where we have to ask ourselves whether we see things in the same way relating to each individual case. So settlement of disputes and outlook, this is something this is already negative per se. If we look at the new DTA as from the 1st of January 2017, I think it's very positive that we have a very clear takeover of the regulation of Article 9, Paragraph 2 of the OECD MA, and a profit correction from cross-border business relations owing to a breach of the principle of arm's length, and now provide a possibility for a corresponding adjustment in the other state if this concurs with the assessment and sees the correction as being justified. So far, this provision didn't exist. In the new DTA, this is provided for, and from a practical point of view, I think it would make sense to file correction applications. We've got mutual agreement procedure in the DTA, which provides with the possibility that the representatives in the responsible authorities can meet for an exchange of opinions. Unfortunately, there is no arbitration clause. We heard how important that is in the field, especially relating to double taxation. The DTA has to be lived in practical terms. That is a positive sentence, and I think a new DTA provides new opportunities and possibilities. If we look at the German view, compliance is the new buzzword on all levels, and the introduction of a compliance instance relating to transfer price matters, and then cross-reference to the current BMF letter from 2016, which contains certain consequences relating to Section 153. So the whole point is transparency in tax returns, transparency in the documentation obligations, in the price transfer documentation. I think transparency is very important for China as well, and that can be seen in the new documentation principles, which go in this direction. And we can only try to look at each individual case and find solution for each individual case. I'm not thinking of a joint audit yet. That might be possible in the distant future, where we can get together and exchange ideas to find solutions for concrete individual cases. But I think one always has to be positive, and this might be something for the distant future. That was our audit case. I would like to thank you very much, Ms. Wu, for the information that you gave us on the situation in China. Thank you very much indeed. Thank you very much to the speakers for presenting this German-Chinese case, which actually happens quite a lot in real life.
View. Aber auch dieser
But this case will probably generate quite a lot of comments as well. So we are looking forward on to the comment of the CEO of Rödler & Partner, Dr. Hans Weggemann. He has a lot of expertise in international restructuring, in the consulting of international corporations. We asked you to comment on this case initially because in Nuremberg it might be easier to agree on certain things, but we found that Mr. Weggemann is a Chinese specialist. He has been providing consultancy services in Sino-German relations for over 20 years now, and he's got a very clear view of the problems that were just mentioned here. So we're looking forward to a very exciting commentary by Mr. Hans Weggemann. Ladies and gentlemen, thank you very much for giving me the possibility to talk about, to give a comment on this very complicated case. Chinese experts, I think we've got Ms. Wu, who is the best expert, so thank you again for having been able to come here to Munich. So I don't have to say a lot of things relating to services in China because you are the expert here. But let me come back to the topic of this being supposedly a simple case. Mr. Baer, you said earlier on that this is a standard case. Well, I'm a bit surprised as a tax advisor that this is meant to be an extraordinary business case, as we heard before you. In your statement, you already mentioned that there are very clear ideas as to what extraordinary business events are meant to be. If there are considerable changes in functions and risk, you say that when long-term contracts are concluded and in the event of events that go beyond the everyday business and the risk of everyday business, And the question that arises here, a company that is already active in 43 countries and now wants to go to the 44th country in 2009 and creates another company there, how can it occur to them to consider that to be an exceptional business event? So one has to check, first of all, whether in this context a certain relevance has been exceeded, or whether there's a special weightiness in this, or special risk in this business event. And we have to assess what the establishment of the Chinese subsidiary has in terms of the revenues for the German company. So this would have to be assessed. A company was established which had probably equity, a service agreement, and a license agreement was concluded, and those are the only business events which you can find in 2009. Even in 2014, you met and you had more history, but apparently, or probably 2009, one didn't have an extraordinary or exceptional business event. And then from my point of view, one would have to find whether further staff was employed by the parent company, or whether the Chinese market was already served by the parent company before then. So apart from the transfer of the risk for the business in China, not a great deal has changed. Basically, one is taking a risk away from the parent company rather than adding a risk to the parent company. And that is why I think in your statements you're not mentioning what effect the establishment of the business has on the company as a whole. And in the event of an establishment, or in cases where one has exceptional business cases that have been asserted, I would expect that the financial or fiscal authority itself would demand higher proof requirements, because you already mentioned, Mr. Baer, that the consequences for the taxpayer are not only a reversal of the burden of proof, but also if you find that there's an exceptional business event, all the services this may lead to a surplus profit markup or surcharge which will be requested.
Which I believe is relevant for the first facts. And also the license agreement, if you take a closer look, leads to 1.5 percentage points, does not lead to bigger changes within the company. As opposed to that, that was probably the reason why this license agreement was concluded, because they wanted to avoid the relocation of the assets. That means the assets should be kept with the parent company know-how, and production know-how should stay with the parent company. And that's why this license agreement was concluded, in order to not create an extraordinary transaction selling the know-how or transfer of the know-how to the subsidiary. That's why I was quite surprised that you had the idea of creating an extraordinary business case. And it's important for me to give the statement here in order to avoid the impression that for all establishments abroad, that this will lead to an extraordinary business case. These are the general remarks about your statements. I'd like to add, and since Mrs. Wu has rendered great statements already, that so I can leave away my Chinese expertise here. It's completely right. You saw that and heard that the service settlements to China is difficult. The bundle of services that also included settlements for financial controlling and HR. And like with IT, they cannot be settled in China. That means this will not be recognized in China. And you don't have to apply this with the tax authorities in China. So you cannot do anything that anything would be accepted in terms of arm's length or whatever. That's why management services are generally critical towards China when it comes to deductibility. And ultimately, like Mrs. Wu was saying, have to be looked at in more detail. And when you use the OECD benchmark as done by Chapter 7 of the guidelines, and it's described there, then we are running into the danger that you go into the wrong direction and that there will be non-recognition in China, and that will not be included here. Moreover, and that's what I also would like to say, and these agreements will be accepted in China, but the pure allocation of costs and in this facts would not be accepted in China. That means it's just an allocation or distribution of expenses will not be permitted for deduction. So these services will be kept unconsidered, and that's why there will be also the taxation. And the next point, also generally saying, the DTA China still knows the service P, and that is also an opening gate for Chinese taxation. That means you would have to examine whether the parent company that is not operating a service PE because of the settlement of these services, first of all, or whether within that service contract, whether there is not happening any transfer of know-how. That is further to the topic of specific IT services that are being assessed as license fees, and that's why they would be subject to withholding tax, and that's what you see quite often in the practical side. That's one side. So service PE or deduction of withholding tax, that also, and also it makes it easier to deduct the operating costs at the subsidiary even more. Like I said, under the bottom line, and in this case, so within the taxation for a subsidiary or a parent company in the context in Germany, that there will be a profit surplus, and also services that can be settled with this profit increase in China, which leads to the non-deductibility of the operating costs. And it's unfortunately standard case international tax law. And that's why I'm thankful that you brought this along, because it's really valuable of being discussed here. It's really worth it. Now let's come to the last point, Mr. Baer. We discussed before, and of course I'm staying confident, saying that seemingly simple facts and circumstances in the future can be taken out of DTA, but I don't believe that the future of the DTA China is in line with the new Article 9, paragraph 2, with regard to a counter correction is the right means to do. And actually that can be explained quite easily. If we find that certain services are not accepted in China as settled services, so that this settlement of these services would be seen as non-compliant with arm's length principle, and a counter-correction would also mean that both states would proceed from an arm's length conditions in the Section 2 of the DTA will not be automatically be used. That means if the German tax audit would seen something as non-compliant with arm's length principle, it would also be accepted by China. That's why I fear that needs to go into a mutual agreement procedure if you want to avoid such double taxation. And but since you're here, Dr. Wu, and also ask you during the break whether joint audits would also be feasible for China. And that's why it's my positive view into the future, like you, Mr. Baer, hoping that this meeting today will help whether this could also be an option for China. And in these DTA cases, with the options and conditions shown by you, and that we can avoid these DTAs. And that is the points I would like to make as a remark regarding the service agreement. And let me come to the topic of license fees and benchmark studies. I believe that you were using different principles, so selectively approaching that. The benchmarks provided for conventional services will be wiped away and said you cannot compare that. And so you're building up something own, or you're developing an own settlement world together with the taxpayer. But on the other hand, you did for know-how transfer and production knowledge, you're also providing a license set rate analysis in the database. That means you would aim at comparability, and then you're calculating a license fee that lies in the bandwidth from 1.5 to 1.8%. And I'd say, okay, we're not talking about comparable benchmarks, and this is shown by the bandwidth alone. And that's why I would tell you, on the other hand, that this should be seen as not usable at this point. And you also explained that staff was also settled, and staff was not settled, but it was included in the 1.5% fee. But this could have been solved by settling the staff individually at this point. The selective approach for commodity services of not allowing benchmarks and to declare that it is not comparable, but still dare to say, okay, I'm going to determine a license rate in a bandwidth of 1.5 to 1.8% is something I dislike. And two more sentences about the group withholding and retention. And the company name. The solution we provided is correct so far. I'd like to add, though, further to the ruling of the Federal Financial Court. For the Federal Financial Court, it was important that the company name was used in the company name. And the Financial Court expresses for these cases, in order to have a settlable service, that's why the product-related brand law and the brand trademark is related to each other, so that only certain products would have to be used for sales purposes where a brand is important for and vital for sales. And in B2B, that means automotive suppliers. I would ask myself whether the brand plays that important role and whether the know-how, the quality of the product would not be decisive, the so-called made in Germany that everyone talks about, and which cannot play a role here, whether a brand name should be decisive here or not. You also referred to the fact, Mr. Beer, that the code adjustment law section 4 of the tax code has been changed, and that's why the term of the contract agreements have been limited in the future, so that you can only assume in the future if there is a direct relationship and if there is a legal changes of the shareholder's position. That means if we go into and intervene in the bylaws or the statutes, if at all you are looking at the company law. And I would also like to know whether that case will also be used for the period 2015 and whether you would solve it differently in order to start with this interesting discussion with you, in order to start the discussion now with you. Thank you very much for your attention, and I look forward to the discussion. Ladies and gentlemen, I'm sure the session is a really great mix of very different contributions, and I hope that we also have interesting contributions from you. Don't be shy. It's just streamed worldwide in the internet. Don't be shy. I have a further remark. We discussed about the case before, and different critical remarks were made, and I accept them. And also relate this to the concrete individual case, where the topic was, and our problem was that the documentation were not okay. That means that is of the essence, making sure that the assessment facts are available, and also with the delimitation. There was a function relocation or rejected, so that's why we created a license. You don't have to write on entire books, but you just have to write down the approaches that you might have had, and we write it down so that it would be reasonable for our auditors, and that's why we don't have to spend half a year with you, because then we can see, okay, that was the thought behind, and then we're leaving, and we say everything is fine. And that's why, you know, it's like a mutual transparency that is requested so that the thinking can be implemented positively, because you have a lot of other audit cases as well. And if you see that you have made the right approaches and have used the right thoughts, and then you go to the next audit, and that's why it was okay. And of course, you can discuss a lot, and like it was mentioned today, there's hardly any cases about transfer prices, because these are complex cases, and we haven't seen many cases for the fulfillment or non-fulfillment of documentation liability. And that's why it's a decision whether a question would be reverted to court. Then we would have a principal decision, or if you relied to an individual solution and try to find an individual solution. Definitely, ladies and gentlemen. So if you do not have any questions, the high-caliber team would be going. Is there no further request to speak? And Mr. Gerlich. Ms. Dr. Wu, one question. What is China's opinion about APA and the consultation and joint tax audits? So we haven't had that many procedures with China. Would you see that positive, or would you see this is rather limited in the future?
As to the APA, China has just signed a bulletin about ATA, but the APA is very technical issues. I'm not responsible for the APA management, so I only can tell you some materials about this issue. This issue, this bulletin ask the tax authorities to ask the firms to provide some materials, such as the master files and the business work and such document. And the APA's duration time is 3 to 5 years. The tax authority can moderate these tax issues before 10 years ago. So if you have a dispute before 10 years, you can you may be asked the tax authority to provide materials, but if you have some tax issues to adopt the APA, you can apply to the tax authorities to make APA arrangement. Sorry, I can tell you just this one. So if you can get more information, you can see the bulletin 62 on the internet. Sorry.
Thank you so much. Thank you very much. Weitere Fragen von Ihrer Seite?
So, do we have any further questions?
Ein herzliches Grüß Gott auch dieses Jahr wieder bei uns. Es ist schön, dass Sie wieder dabei sind.
Welcome. Nice to see you back here. Michael, I have a question to you. And it's related to this secret database that you seem to check in order to calculate license fees. From an Austrian standpoint, and also from a standpoint of other tax authorities, and that's highly problematic to take secret comparables apart from the bandwidth. I fully agree with you, 1.5 to 8. That is comparability of the entire facts and circumstances quite problematic. No, we knew that. I mean, in our tax authority, we thought as well, normally in IWG, the IWG, so you would have like a arm's length comparison databases. Benchmark does not really have, or Mr. Naumann is shaking his head. And in many cases, we think the same. And that was the thought related to the individual case. It cannot be generalized. And the license database at the ISSTG, we know the criticism, and that point is something that has to be seen on an individual case basis. It cannot be generalized anyway. As a special auditor, since the ISTC has this database, this can be used as an argumentation aid. The bottom line result of the discussion is basically, like Mr. Baer said, is an individual decision. And in the real case, and I can also say in order to restore to peace, and I can tell Rödel and Partner, so when we started with 5%, we moved downwards a lot. Because there was reason for me to also mention the Knoppe formula, because that's always a point with the databases. You need to be careful that you don't compare apple with pears. So with regard to licensed product and what can be comparable, if so many unique products or production procedures are being licensed, and that's why it can be difficult to find a second or third comparable case. But that's definitely a groundbreaking examination. And I've mentioned the appetite of the auditor because we wanted to check whether the 0.5% could fit. And discussing this before, we also said that we disliked about this case and the license, the secondment of the specialist was included.
As a part of the audit, we can investigate and find out what the HR expenses were generated. And there was a misrelationship of the expenses to the license revenues from China. And that is, this is something that we tackled first of all. We want to make sure that we maintain a friendly, peaceful atmosphere here. We had a long discussion in advance. I wanted to say that this is not a generalization that is upheld here. I know that the auditors did a lot of work, but seeing we don't have that much time, I wasn't able to describe all the facts. Any other remarks, Mr. Steiner? If we change the factors and we go to Austria, not China, but Austria. Would, as far as the license rate is concerned, and the databases are concerned and the high-level analysis for the license rates. I think that's all you dealt with. Did you have discussions? And how would Austria have approached this issue, this whole case? We didn't want to have a double taxation of the taxpayer. I think that would be the typical topic or argument for having a joint audit, that we discuss this topic jointly at a table, that we jointly try to define the important situation and the fact, and then we would have found a solution where both countries would agree. We would have taken the Knopper formula, and we would have asked exactly the same questions. And I don't know how you deal with that, whether we would be able to see the data, which parameters were used from the database, and whether that would have resulted in the 1.5 to 1.8. I wanted to say something. I could have passed on the question because Martin Schweiger is just behind me, who is head of the transfer price control, and these mutual agreement procedures would be defined by him. Mr. Schweiger, well, since you're sitting here, why don't you say something? Thank you for the invitation. I would like to welcome you as well and say hello. The fascination of the Knopper formula in Germany is well known to me, and for many years now, I haven't been able to understand it because internationally it has never been as popular as in Germany. I think the idea behind the Knopper formula, which is to reach an arm's length result based on this formula, and the OECD publications use it sometimes as well, and that is not a very clear guideline for action, but the attempt to try and put oneself into the shoes of the taxpayer is the right strategy from the point of view of a country of law and order. We want to find a practical solution, but if the solution is based on the Knopper formula and the use of secret comparables, then I think this is very critical, and especially if both parties base their decisions on that. If one can find a best solution, then I think that would be certainly desirable. I would now suggest that we thank our speakers. I think this was a great finish of a very interesting, informative, instructive first day. Let me just give you two householding points. First of all, please hand in your headsets. That is very important. It is very important that they're checked, that they're all charged for tomorrow. And also for liability reasons, it's very important that we get all of them back. And secondly, we will meet for the evening event. And if somebody wants to say goodbye, then we will meet again tomorrow at 9 o'clock for the second day of the International Tax Audit Forum. And Martin, how are we going to continue? This wasn't the great finale, because the finale is coming now. We would like to welcome Mr. Ulrich Schönhauser, who is going to say the final words and summarize the day. He is a judge at the Federal Court, the Ninth Senate, headed by Professor Mellinghoff. And since 2016, he's also his deputy there. He has written a lot of renowned commentaries and is the chair of the association ITAX, which is a sponsor of this event. 2 points. I'm the man with the money, and I am the last person to speak. First of all, as the chairman of the Förderverein, or the Sponsor Association, I would like to thank, first of all, our other sponsors, who I don't want to name because they're all listed in our program. But first of all, I would like to underline that our sponsors don't only support us financially, but they also provide experts for us, Mr. Beckenmann, Mr. Reichel, and Mr. Engelke, who spoke here today and gave their opinions on the problems and the individual cases that were discussed. I would like to thank them specifically, and you make this event possible, and this is very important indeed. And then I would like to thank the other members of the Support Association who do the administrative work behind these financial regulations and that are discussed at this event, who manage this whole event. And I would also like to thank the many supporters and helpers from the Bavarian Financial Authority who support this whole event. This is a huge contribution without which this event could not take place. I would like to underline specifically one person. This is Sebastian Rager. It's his birthday today, and that is why he was especially committed in supporting this event today. Thank you, Sebastian, for coming here on your birthday and working on your birthday. So if I look back on today, I'm going to leave the afternoon out because you'll probably still remember it. Let me talk about the morning first. It began with a warning by Mr. Mellinghoff, which reminded us that the public opinion that is moving towards the idea that the taxation that one feels is okay is the one that is okay, and that is something that we should not indulge in. The legal tax expert is not known for being very likable, but this empathy that is being controlled by the media should not affect our work. And in a second step, we also have to take countermeasures, and this is what this event does. This is the general special merit of this event, where not only you as listeners are present, but also many tax experts worldwide. And for this year's event, I haven't got any figures from the internet, but 2 years ago when we had this event here, at this point we already had 3,000 listeners worldwide who were following the live stream, and that exceeded the IFA conference. And this should encourage us to continue our work. And our work, contrary to what may be suggested in the media, let's just remember the Apple case. I think Phil Baker will sort that one out. Let's think about BASF. Mr. Mellinghoff mentioned that case. And let us remember Donald Trump, who apparently has a $1 billion loss, which is he carrying over, and possibly this is covered by the American tax law. So we should just think about the rule of law and order, legal protection, the protection of confidence, the protection of data, and not about whether it might have felt right that Donald Trump should have maybe paid taxes, even though he was allowed to carry the loss forward. The Finnish situation, or you could say that you have Finnish conditions if you can read what taxes you pay in the paper. We do have a tax publication, the LTZ. It's a short, a very brief little pamphlet which appears every month, and it contains essays and rulings by the Federal Fiscal Court. But we shouldn't wish that in the DSTZ our names and our tax numbers and our contribution to the community be published. Only one person should wish for that, Mr. Stolfus, because then he would be able to increase the circulation of his little pamphlet, and he could perhaps publish it on a daily basis. He could have a far greater circulation, and of course that would be a profit for him. But other than that, I think it would be a disaster. So the rule of law, the protection of rights of confidence and data are things that were mentioned in the various speeches by Mr. Lang and Mr. Baker, and they said that this protection of rights in the field of joint audit, in the field of international tax orders, isn't perfect yet. So let us work on that. Joint audit, if I understood Mr. Spenzberger correctly, and it doesn't matter whether it's based on a legal basis or not, as in Sweden. This is an exit from this field that has not been perfectly covered by the legislator. And it's very nice to hear, and I think I'm speaking for everybody here, if our speakers said that these joint audits are carried out with mutual agreement and mutual understanding, and reaching a jointly agreed result. That is not a matter of course. After your presentation, I spoke to my neighbor, Eugene Rossiter. He's the Chief Justice of the Tax Court of Canada. We've known each other for some years, since we are in the same International Association of Judges, and he was very surprised about what we're doing here. And I asked him, don't you have something like that between Canada and the United States? That would be totally normal that Canada and the United States do something like that as well. And he said, and he's in his mid-60s, I can think of one case, a joint audit between Canada and the United States, one single case. And the idea alone that a joint audit be pending between or with a Canadian and a US-American auditor is horrible for a Canadian taxpayer. It's at this Halloween where on Friday the 13th. And he said because the basic understanding is completely different. If he as a judge, the Canadians do a lot of mediation, and if he as a judge has the parties in a litigation between the tax authorities and the taxpayer, and suggests that $1 million Canadian be paid, then the case is settled. The taxpayer writes a check, pushes it over the table, and the Canadian tax authority pushes it back and says, is there a legal basis for that? If the same happens in the United States, the clerk of the tax of the IRS takes the check and says, I want a second check, please. Or as the head of the IRS told me very casually, if a tax auditor appears in the United States, he kicks down the door, shoots his pistol into the air and says, where's the money? So these very different ideas of law between the United States and Canada, even though the tax law is very, very similar. That is not something we have. We might have very different taxation laws, but we have a common understanding. So let's build on that. And it is remarkable because within 2 days, we will have speakers on this stage from 13 countries, from 3 different continents. And Bavaria and the federal government are considered to be one. But in fact, there are 2. You know that. So let us build on that. That is very important. And if I may come back to the beginning of my speech, let us carry that to the public, to the outside, so that the media-controlled understanding of a tax law doesn't override us. Of course, we've missed something as well, i.e. the rules and regulations and a correction or adjustment provisions which are based make it possible that a correction is possible if there is a foreign audit here in Germany. We can demand changes. We've got some representatives from the Federal Ministry of Finances who are, of course, going to say that they're in a different department. In Germany, there is an initiative to modernize the AOA, and they want to include digitization in the AO. If the joint audit is so far advanced as we would wish, then one would have to adjust the AO as well. And that is our mandate. So these are some comments on today. All I need to do now is invite you to our evening event, and 2 of our sponsors actually are responsible for this evening event. So we would like to invite you to go over to the BMW building for a flying buffet and some drinks where you can have an exchange. I hope the rest of the conference will continue to be successful, and I hope that you will come back in 2018.